Price, that's the number one technical indicator.
You do best by investing for the longer term.
If you can't explain what the business is doing, then that is a huge red flag.
Some technological change is going to put you out of business.
It really is a genuinely extraordinary situation.
Welcome back. I'm Hayden Brain, and you're listening to Opto Sessions, where we interview the top traders and investors from around the world, uncovering their secrets to success. Peter Tuchman has spent over 35 years on Wall Street, making him one of the most experienced brokers on the floor of the New York Stock Exchange. Two white sprouts of hair, coupled with a larger-than-life personality, have earned him the moniker the Einstein of Wall Street, and have seen him become a firm favourite with the press. Peter is the most photographed man on the street, and has been depicted during some of the most pivotal moments in recent financial history. Peter gives us unparalleled insight into what it's like amid the frenetic foray on the floor, or the heat of battle, as Peter describes it. And for anyone that's watched classic films like Trading Places, but wondered what a real-life trading floor is really like, this is an interview for you. Enjoy the episode. Hello and welcome, Peter. Great to have you on the podcast. How's your week been so far? Early on in the week, obviously. It must be pretty early in New York, is that right?
It is. It's a beautiful winter day. And so far, so good. You know, it was a crazy weekend news-wise, but every day is a great day.
That's it. Yeah, exactly. You're most well known, I suppose, and you can tell me whether that's wrong, for having kind of one of the most iconic faces on Wall Street. I mean, the pictures of you on the trading floor of the New York Stock Exchange are memorable. A lot of people will be familiar with you because of that. So I wanted to ask you kind of what's that like? Is that a fairly surreal feeling?
You know, it really is. I mean, it wasn't always that way. The floor of the stock exchange has always been a place where the human element is of such preemptive importance within markets and within just institutions, right? There's nowhere like it in the world. It's an auction market. People scream and yell. People are all on top of each other, but the relationship with the humans is so important. And it wasn't really until they really opened. I mean, historically, if you look in old newsreels, there's so much great tapes of that, what we call the open outcry element, which is the auction, people screaming and yelling and trading stock. And that's sort of what brought people's attention to the floor of the stock exchange. For me, I mean, I've been there for 35 years. I've always been a character amongst characters down there. But it wasn't really until 2007-8 at the financial crisis that they really started to have a active presence of media and photographers on the floor. And it just sort of happened to coincide with my business that I was doing down there, and a few pictures were taken and they ended up getting front page of all kinds of newspapers. So the relationship between me and the press has been a good one. It's fun. I really enjoy, I mean, I love the attention, you know, I got to be honest. For me, it's a stress reliever in a way, because it sort of breaks the stress of the job. Let's be clear, you know, to be a trader on the floor of the New York Stock Exchange they claim it's next to air traffic controller, the most stressful job on earth. So all that being said, when you're in the midst of it, you're trading other people's money, you know, and you can't really afford to make mistakes, and you have to be on right away at all times. It's sort of a fun, you know, it's a fun relationship that we all down there have with the press. I'm not the only one whose picture gets taken, but I do have that sort of iconic look that's represented the floor for a while now.
Yeah, absolutely. So, I mean, it's been a pretty crazy, unprecedented year, I suppose, if I can use that word. But if we look ahead towards 2021, are we going to see more of you looking, you know, shocked by a plummeting market, or perhaps we're going to see more sort of gleeful expressions on your face in light of climbing markets? Where do you think, or what do you think we'll see more of in the press?
You know what? I love the fact that you called it an unprecedented year, because it surely was unprecedented. But we don't have to get into the politics of it all. What we see now on what used to take weeks, months, and perhaps generations to move economically within markets and whatnot. The volatility I'm talking about, whether it's a bull market or a bear market, now happens on an intraday basis, moment to moment. So, my reactions are not posed at all. They are really a reflection of the stress that I'm going under, whether the market's cooperating with the order flow I'm getting. So what do we have to look forward to? Surely volatility, right? Obviously, Mr. Trump had a strange, odd relationship with social media and with markets. He ran on a platform that the stock market would be doing good under him. Unfortunately, he did not pay attention to the health and welfare of his population or the relationship that markets should have to social media and to a president, which is kind of like a wall between them, right? President and Federal Reserve should not have they should have a healthy relationship, but not one where the one should be pressuring the other to do things. So going forward into 2021, I anticipate a lot more of what we've seen. Obviously the new administration has a job ahead of itself. Right now, you've got a debate going on within the market's psyche, between the positive news about a vaccine and then the negative news about the virus. Positive things about reopening and the future of economies globally opening up. So these are the things that are moving the market right now, which is volatility, vaccine, and obviously the transition, the smooth transition of changeover from one administration to the next. And so this debate is happening on an ongoing basis. I would hope, I thrive on volatility. That's what, that's where my job comes in. That's what makes me good at what I do, is to be able to navigate, whether it's a crisis or whether it's just a volatile time, the markets as they go ahead. I would anticipate going forward in 2021 that we're going to see a lot more of that, right? We've got a world that's right on the edge of a really bleak winter, and the United States is definitely in some difficult economic times ahead, irrespective if the market seems to be positive and rallying back, which is basically a strategy of hope at this point, because there are so many unknowns. I would think that the banter between the bulls and the bears will continue, and you're going to see a lot more reactions into 2021.
Yeah, great. And there's actually some really interesting points there that I want to pick up towards the end of the interview. So we're going to revisit some of the themes, particularly sort of whether we expect more volatility to continue into 2021. That's something I want to discuss. But I'm just conscious of people that kind of aren't familiar with your work. Maybe it might be worth here bringing out some more of your background. So just to put the rest of the interview in context. And I've done a bit of reading sort of around you. I visited your website, listened to a couple of interviews before the call. And your journey to eventually taking up a role on the trading floor in your mid-20s, I believe, is fascinating. So firstly, am I right in thinking you were part of a kibbutz in Israel before you joined the trading floor?
I had an extraordinary journey on the way to finding my career. It took me from growing up in New York City. I spent a year in Israel on a kibbutz, an agricultural commune. That was just something that, young Jewish guys did in the 70s. But it also sort of molded a lot of my interest in the beginning, because agriculture turned out to be something I really wanted to pursue. I ended up coming home. I finished high school. I went to Israel for a year, then came back to the United States and went to the University of Massachusetts and proceeded to spend the next 2 years studying agriculture. It turned out to be not the career I chose. I just, after learning all that I needed to learn at the time, I saw that was really not the future that seemed reasonable from my experience and where I'd come from. So I continued to strive on. I have a degree in plant and soil science, and then I went on to do economics, international business. So I came out of college with a really robust, and then on top of it, I had developed, as an entrepreneur, I had started to manage jazz bands and ended up, once I finished college, moving back to New York and opening up a record store. So, what's been so great about the journey is that I've really been able to not only just sort of, prance through all these different things and these different interests, but I was able to spend some time learning them and trying to figure out where my career would end up landing. So that was true, and that did happen that was in 1977.
Yeah. I mean, it's really interesting. I did also read that you were trading commodities during the time. I mean, during the time that you were studying for your MBA, is that right?
That is actually true. So I finished college in 1980. I moved back to New York. I was attempting to get a master's degree in business, which I never finished. At the same time, I ended up opening up a record store in Greenwich Village in New York that was sort of modeled after a European record store back in the 70s and 80s, which had listening booths and a coffee bar, and it was an art gallery at the same time. And so I did that in the afternoons, and I was trading commodities in the morning, and I was going to get my MBA at night. So obviously I probably thinned myself out so that not any one of those things got the attention it needed to. I did not, in fact, finish my MBA. The record store was wonderful for about a year and a half. It did not succeed. And trading commodities was super exciting. It sort of got me that the taste of what trading was like. It was successful for a time, and I ended up making a bunch of money and then losing it all. So
yeah, well, quite a baptism to trading. I was going to ask actually, yeah, sort of, is that was that your first taste of trading? But it seems like it was. So then in 1985, you start work on Wall Street. I think you start out as a clerk before becoming a fully fledged broker on the trading floor as you are today. So you may need to correct me if I'm wrong, but I think that transition happened within just 3 years. So what was behind that kind of rapid ascent?
So historically, on the floor of the stock exchange, it's a place where there's no particular training for it. It's not like a lot of the people upstairs on trading desks who really follow a very distinct path of getting a degree in economics or in business, and then going on to getting an MBA, and then working on a desk, whether it's in mergers and acquisition, investment banking, and whatnot. The floor of the stock exchange is historically a place where families would come down. Your grandfather worked there, your father worked there, and then you came down. So there was nepotism in that way, but it was sort of more of a family neighborhood type of place, right? It was a grouping of Italians, Irish, and Jews who would come down to work on the floor of the stock exchange from the early 1900s. There is no training for that job. Basically, there are qualities within an individual that makes one good. Somebody thrives on chaos and adrenaline, loves that kind of energy. It's a really distinct job description to be a trader or to be a member or to be an employee on the floor of the stock exchange. And there's sort of been a caste system historically in order to get the ideal job, which is everyone's goal, if the floor of the stock exchange is their destination, is to start at the bottom and learn all the jobs that lead up to that that position, right? So it didn't matter who you were, how much money you had, and what kind of education you had. If you wanted to work on the floor, you started at the bottom and you rose to the top if you were lucky enough to do that. So I started as a teletypist, in fact, not even a clerk. It was a summer internship that I had gotten with Cowan and Company on May 23rd, 1985. And I remember it well. And this is pre-computer, right? We had Quotrons on the floor, but computers were not in the business for many, many years to come, really. And so it was a basic, there were human beings, there was a lot of paper, there was a lot of screaming and yelling. And if this kind of atmosphere was somewhere where you felt you could thrive and you kind of knew it right away, I surely did, then it turned out it would be the job for you. Historically, it would end up taking many, many years for people to go from whether it would be a squad, which was a runner, one of the lower jobs on the totem pole there, which would be basically if a broker was trading in the crowd, needed to get information back to his booth, he would raise his hand, somebody would come up in a blue jacket, we were all designated by color of jackets, and he would run the information back to the booth. So historically, you would become a teletypist or a squad, you would then become a clerk, and then you would go up the rung on the different kinds of clerk jobs, whether it would be option markets that you were trading, whether it would be retail, meaning that these were smaller trades. They were good to learn how to do the big stuff. A retail clerk would be someone connected to a retail desk of a brokerage firm, trading small lots of 100 to 500 shares of stock. Obviously, the next move up would be an institutional clerk, someone who was on the phone with the big desk player, the institutional desk of whatever company you worked for, and you were trading some size shares. And then one's hope would be, once you've gotten all that training and you've learned all the nooks and crannies of what goes on the floor, what's demanded of you, your word is your bond, the level of honesty and transparency, and basically somebody who could thrive under pressure that was really, really quite something at the time. You're trading other people's money in the midst of crisis often, and it's not like you can say, hold on, everybody, give me a minute, I have to get my shit together. It's like you're there, the bell rings, and you're off to the races. So once you become your goal, obviously, after being an institutional clerk, is to get a seat on the stock exchange, which meant, I'm sure some of your audience has heard, that's what, it's not a chair, you don't get to sit down. It's actually the right to trade stock for a brokerage firm. Early on in the 1900s, when they established the stock exchange, and it actually goes back as far as the mid 1700s, the right to trade stock was a real honor. It was a special job. It was one's ultimate goal, and sometimes took anywhere from 5, 7, 12, 15 years to achieve, because there were a limited amount of seats established in the early part of the 1900s, as we have in America, taxi medallions, right? There are businesses where the right to trade, the right to drive, the right to be in this industry are established by a medallion or a seat. And so there are a limited number of them. And the only way you will get one is if someone retires, someone moves on, someone passes away, or someone, goes on to do other work. So my journey, it was a function of a lot of being in the right place at the right time. It was that I believe I was good at what I did. I thrived off that chaotic atmosphere, which was really wonderful. And at the company I was in, I really, I would have to say, it was a lot of luck in so many ways too. I got to the clerk's job. I did it well. A number of people moved on to other firms at the time. One gentleman retired, and I was fortunate enough, after around 3 years, to be given the honor to have a seat on the stock exchange.
Yeah, I mean, it's amazing. And I guess you must have loved it. I mean, you've been in the trading game for over 35 years now, I suppose that makes it. So having led that sort of fairly diverse early career that we talked about at the top of the call, what about this industry sort of encouraged you to stick around?
You know what, for me, I think, look, we all sort of search for what jobs we end up really loving, what things really work with our demeanor and our personality and whatnot, and places where we can thrive. And for me, it seemed like, and I'm saying this in retrospect because I'm sure I wasn't thinking at the time, but it's really important to love what you do, right? I always say that if you find something you love to do, you'll never work a day in your life. And I was sort of lucky enough to find a place where my sort of, off the rails, boisterous, loud, often obnoxious personality I was good with people, good with numbers, thinked quickly on my feet. How lucky was I to be able to find a place where all of these qualities, which are a little, off the cuff, I would say, a place where I could thrive, right? And I think that's where we all are. Everyone's search is to find a place where we feel at home, somewhere where we can thrive, somewhere that makes us really want to get up in the morning and go to work. And so that became clear to me almost instantaneously. I'm a people person. I love that part of it. I think the eclecticness, if that's a word, of my careers before I got to the floor of the stock exchange helped mold me as a broker too. Because when you are in the heat of battle and when you are sort of face to face and up against others who are representing their customers and whatnot, there's sort of a banter, sort of a relationship, sort of a human element that I've never been able to see captured in any other job or experience that I've ever had. That was a gift for me, really. I kind of knew it the minute I got there. Obviously, my career since I've been down there has had its ebbs and flows. There were some good times. There were some bad times, as we all go through whatever struggles we go through. But basically, it was a perfect job description for the qualities that I possess as a human being and as a professional.
Yeah, okay, completely. Well, I think that's done a pretty good job of introducing you to anyone that didn't know you, and some really fascinating stuff in there about your background. And I mean, you mentioned the financial crisis earlier. I have mentioned, obviously, that you've been on Wall Street for over 35 years now. And that time period, I mean, not just a financial crisis, but it encompasses some of the most iconic moments in recent financial history. So I was keen to get your take on these and kind of what it was like to be on the floor for these pivotal moments. So firstly, for the US crash in 87, you were, that was obviously early on in your trading career, but what was it like to be on the trading floor on Black Monday?
So probably in my opinion, and I've lived through 35 years of crisis, whether they're financial, obviously, health, or many others, which we can describe going down the line. The crash of 87, I was still a clerk. I had not gotten my seat yet. The market was a different place back then. There were 1,565 traders. There were probably a couple of thousand clerks. There was a support staff from the market makers to the brokerage firms, to the clerks, to the New York Stock Exchange employees, that amounted to thousands and thousands of people in many multiple rooms trading thousands of different stocks, right? I would say at the peak of the 80s, there were 5 trading rooms, right? We had the new room, the blue room, the expanded blue room, the main room, the garage. These were rooms. There was so many people involved in the markets that were roaring and wild and crazy in the 80s that you really had to, the markets were growing. The population on the floor was growing. It was a super exciting time. There was not yet to have technology really come into the floor. So it was a very human-based place, male-dominated for sure. The crash of 87, I really kind of remember as if it was yesterday. I was still pretty new. I had only been there for a couple of years. I had just moved up the rung from teletypist to option clerk to retail clerk to institutional clerk. The responsibility of being an institutional clerk meant I was running the booth for a large brokerage firm, Cowan and Company at the time, right under what people may see when we ring the bell. The booth I worked in was right underneath the podium there where the bell is. So if anyone's ever seen a movie of the stock exchange, I was in the thick of it. What it also meant was that I had a staff underneath me, all the clerks, the retail and the option clerk and teletypists and 5 other brokers that I kind of had to manage. I had to orchestrate the execution of stock for the firm. So that job in so many ways was one of the first big pinnacles that I had reached. And to be at that position in the crash of 87, when things were all being done on paper, we had really not seen anything like this for a while. Surely the first time where there was sheer and utter panic, in my experience from the floor. Any given day was often an exciting one. There was volatility. It was exciting. It was fast and furious. But at this point, as we've seen subsequently, there are days that are really stand out and periods of time where there's sort of a perfect storm. And 1987 was a perfect storm. It's a long story to go into what really happened, that culminating in the crash of 1987. People can read that story. But what was real was that this was real money, real people, real fear. Stocks were trading down tens and 20s of dollars. At the time, there was nothing electronic. There was no technology in the marketplace. So basically, it was a sheer human open outcry situation along with panic and fear, right? And when you put all that together, it's really, I mean, I could just describe it to be like, crossing the ocean on a plane and everything's fine and things are on automatic pilot and everything's running smoothly. And then you hit a storm, and at that point, everybody who's on the plane, those flying it, support staff and customers are getting shaken up quite severely. And that's really the way to describe it. I remember orders coming out of a machine which we had. It was called a dot machine, a quotron machine, which was disseminating orders from upstairs via this small sort of a teletype machine. And the orders were being spit out just by the hundreds. And brokers were just running, grabbing stacks of orders and just going out there and basically, it was almost like when you can relate it to what they have now. When young people go to a concert, it's like the mosh pit, right? Where people just jump off the stage into the middle and hope somebody's going to catch them. It was that kind of exaltation and excitement, and it was real money. There were fortunes made and lost. I believe that there are people who probably jumped out of the window on that day. So I just remember it being chaotic and frenzied. I remember it being fearful in that mode. I really have a memory of it testing every ounce of my ability to stay calm in the onset of a crisis. And it was sort of that was kind of where my career was made in so many ways, because a lot of people didn't get through that day without huge errors and huge complications. And I feel, I'm knocking on wood, I feel blessed that I thrived in the atmosphere, and that really kind of etched my name in the book there, because I got through the day. Yes, fortunes were lost, stocks traded down, but we basically got through the day taking care of our customers, our fiduciary responsibility to get the best execution for them. But it's ingrained in my psyche that day of just watching things falling and people screaming and yelling, and it's sort of, if you've ever seen the movie Trading Places, even though that's done in the pits of the commodity market, but if you remember at the end of the movie when they are trading the stock, all the paper gets dumped on the floor, everybody takes a sigh of relief, and it kind of looks like a battlefield. And that's what it looked like on that day.
Yeah, I mean, I can only imagine. Similarly, in 2007-8, the financial crisis, I mean, it must have inspired similar sort of pandemonium, but I imagine there's a difference between the two. I mean, no two crises are the same. So how did it compare to Black Monday?
So, look, Black Monday was a couple of days, right? Monday was the culmination of things that had sort of started to set themselves up globally and economically on Thursday and Friday, and then culminated in Monday's sell-off. We did see those people who were able to get through the day and survive the day, that the market did rebound after that and go much higher going forward. It was a microcosm of all things crazy and anxious and chaotic on that day. Each one of these things, which I will describe to you, which I've experienced, has very different qualities. If you look at the crash of '87, it being a financial crisis, there was a lot that led up to it. We can, once again, your listeners can read up on what caused it. It's sort of it's a fascinating story. It will be a story that people will try and learn from going forward for many generations to come, about the mortgage crisis, about lending, predator lending, and about all the things that led up to a failure of the banks, the Federal Reserve basically needing to pick which companies were going to survive. As we know, Lehman Brothers and others did not, and they failed. But there was a visceral reaction to the fact that we saw so many of our coworkers in the investment community lose their jobs in the tens of thousands. Fortunes once again, yes, were lost, but the reality that in a short period of time, there could be some bad actors still to this day that will undermine the integrity of the banking system and the lending system to such a point where the market would fall as it did, and that some of the largest institutions in the world and companies, General Motors, AIG, would fail and would be needed to be bailed out by the Federal Reserve and the government. So that was a longer period of time. You'd come in and day out, and you didn't know really what the future bring. You didn't know if this would be the end of it all. You didn't know who was going to be the winners, the losers, or the survivors. So it was more prolonged. It was more intense in a way, because it became more real that, we didn't, when things are fast and furious and you get out of them, you take a sigh of relief. And within markets, what goes down must go back up. And that's what happened in 87. This one took a lot longer. There was it needed a strategy, it needed a plan. And we saw it as the government bailed out General Motors and AIG and the banks and the brokerage firms. We saw those win, some lost, some survived, and then we moved on. So that was a little more ruthless in some ways. I would say, go ahead, sorry.
No, I was going to say, you've kind of described it there, obviously correctly, as a much sort of longer term occurrence. It's not a single day. This is happening over nearly 2 years. So did it feel like traders and brokers on the floor were kind of caught similarly off guard as they probably were, or as I imagine they were on Black Monday? Or was it something that you had seen coming for a larger extent of time, or were able to sort of deal with a bit more effectively? What's your take on that?
You know what? Look, so people who are on the floor do not have skin in the game financially, right?
Yeah.
When we as brokers on the floor represent, whether we are doing business for Merrill Lynch and Goldman Sachs, or whether we're doing business for a hedge fund or a brokerage firm or a large institutional investor, we are not trading our own money, right? So each crisis and each day is sort of, you come in there with a clean slate. We have a motto on the floor: what goes on from 9 to 4 is over at 4 o'clock. Whether, money makes people do funny things, react as funny in a funny way. And, we are the actual point of execution on the floor of a long chain of events that lead up to us getting in order to buy and sell 1,000, 10,000, 1 million shares of stock, right? There's a lot of homework being done upstairs on desks, portfolio managers and advisors and analysts. And then it comes to the main trading desk upstairs, and they decide how they're going to allocate the order flow that they're getting from their customers. And then they come down to the floor and speak to the clerks, who are given instructions that they got from those traders upstairs, that they got from the portfolio managers and the analysts. And then so all this information comes down to the floor. And then once you get down to the floor, you are in the midst of an auction market, screaming and yelling, where everybody's brokers are there to represent their customers to the best of their ability. And everybody has different instructions, and everybody is being given a parameter of where they can actually execute stock. So that we're never prepared, and we're always prepared. We start the day fresh. We may get an order that is a continuation of yesterday's order, but when you walk in the morning, and especially now more than ever before, when you have trading around the clock, what goes on the floor of the stock exchange in New York City, which is obviously doesn't possess the 85% of the volume that they used to trade back in the day before technology, but the institution itself of the NYSE and what we do as brokers on the floor representing our customers in an amazing way affects how markets across the world will adjust and react once our trading day is over. So it's very, very important. And it's like, you can't do things over down there. You're in the heat of battle. We are prepared for anything, right? We need to stay transparent and honest. We need to be on call at all times. As brokers, we need to be able to adjust and freestyle and think on our feet, because all the homework done that gets us the order that makes us go into a crowd to trade it can all go out the window in so many different ways when we are confronted by all the other people who have an agenda also. One of the greatest things about an auction market is for everybody who's buying it, who thinks they're buying it for the right reasons, whether it's earnings or news or headlines or guidance or whatever, there's someone out there selling it, right? So that's the fascinating thing. And they each think they're doing the right thing. So there's so many things that go into what we do. obviously when we get caught off guard, and we can go on, and I'm sure you'll ask me what it was like to trade those 2 weeks from February, those 6 weeks from February 12th, 2020 to March 23rd, 2020. Was I prepared for that 10,000 plus sell-off in the Dow and the double-digit sell-off in the S&P? No. Was everyone caught off guard by this virus? Yes. So when you're at the floor of the stock exchange is really the crossroads of all things news, headlines, social media, and finance, all coming together at this delta of where the point of execution, where me as a human being go into a crowd and interact with other human beings to buy and sell stock. So while we're never prepared, we're always prepared.
Yeah, completely. Okay, yeah, interesting. And you guessed right. I was going to ask you about the kind of coronavirus-induced sell-off that we saw in March, and then kind of the trading up until present day, I suppose. But if we focus on the sell-off in particular, I mean, that I'll use this word again begrudgingly, unprecedented volatility that we saw there. I mean, how does one cope in the midst of battle, like you described it earlier, with such extreme levels of volatility? Can you give us an insight into your mindset there?
Sure, absolutely. So, look, everybody, people are trained for bad days, and they really love good days, right? So some of the training, some of the experience that I have that makes me able to, and the qualities that I have that makes me able to navigate through these things is a certain detachment from what's really going on in so many ways. When I go onto the floor, right, as I've said in interviews before, and it is a fact that I've never owned a share of stock in my life personally, okay? So what that does is that cleans my slate, that when I go in to do my job on the floor of the stock exchange for the customers of the company I work for, I need to go in there with detaching from emotion, detaching from fear and anxiety, and making decisions on the spot to best benefit my customer. Okay, so it's like, I'll use the plane analogy once again. You surely don't want. It's like you don't want the pilot of a plane who's happening to have marital problems in the midst of flying a 747 across the Atlantic Ocean to be all wrapped up in the problems he's got going on at home, when all you really want to do is cross the ocean safely on this very large plane, which is scary to begin with. So, it's super important that that we follow the rules. I mean, you're taking me back to those 6 weeks, and I can be very specific in it, because it was really, even though I described the crash of '87 at the time as being something which really stands alone in so many ways, that I must say that the rise of the market over the last 4 years and the incredible crescendos and landmarks which we saw as we would gather 1,000 points every month, every 6 weeks, every 2 weeks, and that incredible rally. And those were days of euphoria, even though my glee and excitement is when the market cooperates with my customers and it cooperates with my posture in trading stock for the customers. It's important for me to keep my head when everyone else is losing their head, to detach from it emotionally. Once again, I'll mimic one of the great movies of our time, which was the original Wall Street movie, which is the story of Ivan Boesky, who was a corporate raider. And in the movie with Michael Douglas and Charlie Sheen, when the market's going down, he turns to him and he says, "Never get emotional about money, Gordon." At the end of the day, I can't throw my hands in the air and say, "Guys, stop. I can't handle this," or where I will start getting really anxious and emotional, because it's not about that. For me right now, it's a numbers game, and I need to protect my customer. So for me, somebody who thrives on the adrenaline and the volatility, I would say every day over the last 4 years has been incredibly exciting and incredibly volatile, whether it was Brexit, whether it was the North Korea story, whether it was China trade. Once we've seen we're in we're in a world of new rules on the stock exchange with the event of the technology, the computers, algorithmic trading, and social media, because in this market today in 2020, we actually have computers that are able to engage content and keywords within social media that will actually engage with the market. You know, it's a bit irresponsible, I think, in a lot of ways. It surely was irresponsible of our administration here in the States to sort of cross the line and, you know, give out information on headlines and tweets that knowingly would affect the market in a massive way. In that case, I think that was incredibly irresponsible. And I'm sure once this administration moves on, we may have to look at that and see how that affects volatility. But to be specific about the sell-off that we saw from February 12th to March 23rd, which was so on February 12th, the markets pre-pandemic had hit record highs across the board in the Dow Jones, in the S&P, in the Russell, and NASDAQ, right? February 12th, the consumer was in great condition. The bank's balance sheets had rebounded over the last 13 years from the financial crisis. Companies that had gotten bailed out had rallied and flourished. The banks had robust balance sheets and were really doing well. Interest rates were at a reasonable level. Interest rates were at a reasonable level, and unemployment was at a low. So that was fine. Things were good. The consumer was strong. Corporate earnings were good. Guidance looked positive. The economy looked like it was good condition. And the market, though volatile over the 3 years plus of Mr. Trump's administration, the strength of the markets, while Republicans believe it was a function of Mr. Trump's lowering corporate taxes and changing regulations on banks and other industries, a lot of people on the other side would say it was really a culmination of Mr. Obama's bailout, the bank bailout, Federal Reserve, and whatnot, having spent 10 years rebuilding an economy from the financial crisis, and that was why we were where we were. Once the February 12th, it became apparent that something was going on with the pandemic, even though we now find out in retrospect that Mr. Trump did, in fact, know the situation, what was going on more than he was willing to admit at the time. As the virus became real to all those in China, started to travel across the globe, started killing people in the Middle East and in Europe and Italy specifically. And then it leaped over the ocean to the United States. Markets started to react to it. Some people say Mr. Trump gave information on the inside to people in the Senate, to hedge fund managers and whatnot, perhaps to his cronies. But we don't need to get too conspiracy theory on that story, even though it's probably has some merit. But what ended up happening was death became a reality. Global shutdown became a reality. The potential economic obstacles of a shelter in place and of massive deaths and pandemic became a reality. And perhaps lack of leadership became a reality, in that we were not getting a coordinated response, that suddenly we were getting dribs and drabs of information. We noticed people were dying, and there was a virus that was coming across the world to kill us. And the market started to respond to it on a daily basis, and we saw markets sell off thousands of points a day. We, after 9/11, the market instituted what's called circuit breakers. I think the circuit breakers may go back before 9/11, but a couple of things happened around that time where we realized that the market, perhaps a bit long in the tooth, but having been up as it was, what goes up does come down. Economies and markets and countries and globes do obviously end up in crisis, as we've seen multiple times. But what we realized was that the key to keeping a smooth and orderly market is keeping the population always having access to their money, right? What we feared, whether you're looking at the movie It's a Wonderful Life or you're looking at the run on banks during the Greek crisis, when people don't have access to their money, they panic. And that was something that we never wanted to happen. So they instituted circuit breakers on the floor of the stock exchange. We are one of the only markets that do that. That when a market, due to whatever crisis we're engaged in, sells off 7%, our market shuts for 15 minutes. What does that do? That gives people a moment to pause, to disengage emotionally and to panic and anxiety about global crisis, and basically put their ducks in a row, see where the bodies are buried, know where the buyers and sellers should be, and gives it a moment to really breathe and pause. And while we did see the market over the next 3 weeks sell off 10,000 points on the Dow and double digits on the S&P, we did see the circuit breakers come into called on by the market multiple times in a day and multiple times over those couple of weeks. Now, yes, the market did continue to sell off in a drastic way, but those circuit breakers did work for what they were worth. I believe if we didn't have them, the market would have been down much more than that.
Yeah, absolutely. But I mean, I guess on the flip side of that, we've seen some pretty positive growth in global stock markets over the recent weeks. I mean, on the US election result, arguably, as well as positive vaccine progress as well. So, I mean, two questions spring to mind on that basis. Firstly, are we seeing increased trading volume going through your stock exchange, the New York Stock Exchange, because of this kind of resurgence of growth in global stock markets?
Great question. Yes, and I love to answer it because I am truly an ambassador for the floor of the New York Stock Exchange. Historically, we've done 85% of the volume throughout the world, and with the new technology over the last decade, we've seen our volume, as other trading platforms have opened, dwindle down to 25 to 30%. However, the relevance of the floor of the New York Stock Exchange as the only market in the world with human beings has shown itself clearly through this crisis. What happened, and I touched on it for a moment before, after 9/11, when the markets were closed, not only were the markets closed, but the floor of the stock exchange closed for 5 days, the SEC and the stock exchange realized that they need to put in place, with new technology, a way that in case of crisis, whether it's nuclear war or whether it's a pandemic, that people need to always have access to their money. Okay, so what they've done is they've built a mirror image trading platform electronically, that in the case of a crisis, that they would be able to continue to trade, okay, and always have access to their money to protect against panic. We saw that happen, and we saw it called on March 23rd, after this massive sell-off, bottoming out at the March 23rd level. We saw, due to the health and welfare of the investment community and the New York Stock Exchange floor community, we saw the necessity of the SEC and the regulators and the New York Stock Exchange to choose to close the floor of the stock exchange to its personnel like myself. What didn't happen was the electronic market trading platforms did stay open. So at no time were people panicked or not having access to their money. What we saw happen over the next 2 months was a market that traded without human intervention from the floor of the stock exchange. Obviously, algorithms are built by humans, so there are people hitting buttons and trading electronically, and that did continue without us as humans on the floor of the stock exchange. And we're grateful for that. We did not want people not to have access to their money, especially in the midst of a crisis. But what we did see was that the demand for the human to come back onto the floor of the stock exchange, the relevance of the human being for the opening auction market, for the IPO and secondary market, for the closing market, right? Obviously, every industry has changed with the advent of technology. Humans have been outsourced across the board, whether it's in factories building cars to the floor of the stock exchange. We've seen the overuse of machinery and the outsourcing of human beings. we obviously feel strongly, me as a human, and this being my career, that the human element on the floor of the stock exchange, trading, especially in times of crisis, are incredibly important and relevant. And this was borne out by the reaction of customers over those 2 months. They were grateful that they could trade without us being there, but they knew that there was a piece of the puzzle missing, especially in terms of crisis. When markets go up thousands of points in a day, intraday, when there's more than a 1% move on a daily basis for months and months and months, we've seen that the volatility and the liquidity and the human element becomes that much more important. An algorithm can only react to things it's been programmed to do, and there is a level where a human being can take over from that. As I said, once again, to call up the analogy of the plane, the bottom line is if I get on a plane and I take off in New York and I cross the Atlantic Ocean and we're on automatic pilot and everything's cool and smooth as we guide across the ocean, and suddenly we hit some turbulence and I run to the front and open the cockpit and there's nobody sitting in there, well, I'm obviously going to be a bit concerned. But knowing that there's the pilot up there to take us off automatic pilot and fly it gives me some sense of relief. Same here with the markets and the people on the floor of the stock exchange. Things can run electronically smoothly. It's, numbers matching up with each other, algorithms buying and selling 100-share lots and whatnot. And however, with the advent of the algorithm and the content words and the social media and the headlines and markets reacting to all these things, it can compromise the integrity of the market when it goes up and down thousands of points, all being caused by electronic trading. So what was wonderful, and my relevance was borne out by the situation that they called us back in on May 23rd, and they said, yes, you know what, we've been able to orchestrate a safe atmosphere on the floor of the stock exchange within the midst of the pandemic to reopen, and we are doing it because the human element is that much more important at these times. Your question, I'm sorry to be so long-winded, but it's important for people to note that that's why we're there. That's why we've maintained our relevance and called it up once again. And we have, in fact, seen since May 23rd, upon reopening of the stock exchange, the most volatile and wild and crazy moves since then in a marketplace, mostly up, sometimes down. But we've gotten so much more volume on the floor of the stock exchange as it's been spurred by humans being there once again, a robust IPO market, and a market that's moving where people feel that in crisis, there's some human being at the end of all this who's going to make decisions based on the customer's well-being. So in answer to your question, the human being is relevant and necessary. The market has responded, and the investment community has placed a lot of responsibility on us to trade and keep the markets smooth and active and with integrity and honest and transparent. And in return, we've gotten a bit of a step up in volume.
We hope you're enjoying the episode. For interviews like this every Thursday, subscribe wherever you get your podcasts. And while you're there, make sure you give us a star rating and leave guest suggestions along with any other feedback in the review section. Now, back to the show.
So since it reopened then, the New York Stock Exchange, are you at a far smaller capacity? Like, how's it working with social distancing and all that sort of stuff?
So, look, I think as we're seeing with every business attempting to reopen in the pandemic, the one thing, unfortunately, we've lacked leadership and a federal mandate in so many ways. And that's why we've got a pandemic that's run wild at the moment. But we've seen that it's super important upon reopening that, first of all, we follow the rules, we follow the standards for a safe reopening. The one thing we don't want to happen, which is happening in many businesses now, is an attempt at reopening, it failing because we didn't follow standards, and we have to reclose. And what we're seeing is once a business, whether it's a restaurant, whether it's a retail shop, or whether it's the floor of the stock exchange, a second reclosing could jeopardize the future of the exchange in so many ways. So we opened, it took 2 months to do. They worked in accordance with Scott Gottlieb, who was the ex-head of the FDA. They went through a lot of federal and local doctors and institutions to come up with a plan that was incredibly rigorous for the floor of the stock exchange to open safely. Because let's just say, we are no different than a fast food restaurant that's booming on a Saturday night. We are humans in an enclosed space that we are up in each other's grill at all times. So in order to open it correctly and for it to be able to stay open, we had to follow super, super strict standards. The stock exchange has a testing center in the entrance hall of the floor of the stock exchange, where we are monitored by temperature, where there are random tests very often on a daily basis for COVID, with a very quick turnaround time, can be as short as 9 to 10 minutes, right? If people are not feeling well, they come in, they get tested, they are sent home. There is social distancing on the floor, very strict. There's plexiglass partitions between everybody who's down there and trading. There's only 25% of each firm allowed on the floor. So there is no socializing going on. People are standing on small little circles and are separated by plexiglass in their booths. Those who walk around, there is no more open outcry. There is no more public interest, which is where humans go in and interact with other humans in a crowd. IPOs, when they are opening on the floor, have very strict social distancing rules. We all are wearing masks. So we knew that we wanted the people and the humans to be back down there. We knew in the way we are, because it's sort of an incestual, to use that term, but sort of a very human intermingling atmosphere, that if we didn't follow the rules, that we would be jeopardizing the health and welfare of our coworkers. So that's been super, super strict, and it continues to be that way. We've been open since May 23rd. That's June, July, August, September, October, November, 6 months of trading. The markets have been cooperative in enjoying the human interaction down there. We have not loosened any of the standards that they did take into account on May 23rd. And for that reason, we've had no spread, and we're able to continue to be open.
Yeah, completely. I want to build on the human sort of element and interaction aspect that you've been talking about. You gave a recent interview to Opto magazine, which incidentally will be published from late January on our website, so everyone will be able to view it there. But you said particularly for the larger orders, a human touch is vital, I suppose, because you have to buy or place the order correctly. And I wonder whether you could explain to the listeners sort of clarify that point and why the correct placement of an order is so important.
Okay, so I'm trying to keep it as simple as possible. Let's look at a farmer's market, for instance, okay? If you're from New York City on Union Square, we have a beautiful farmer's market every Wednesday and every Saturday. I'm sure every town across Europe and England has them too. We have them here, where basically farmers will come and bring their wares, and people will go in and shop. Individuals will go to shop for their families. Restaurateurs will go in to shop for their restaurants, right? So, and I don't classify anybody's financial situation or need to buy and sell stock any more important than anyone else. But there's a different standard and a different posturing. If I'm going into this market to buy dinner for my wife and 2 kids, I'm going to go in and buy a thing of cherry tomatoes, 1 piece of fish, a few apples and a piece of pie for dessert. And I'm able to walk through the market unencumbered, buy dinner for the 4 of us, and move on. If I am a larger institution and a person buying for a restaurant that's going to serve 500 dinners that night, well, the way I approach the seller and the way I come in to the market as a buyer has a different feel to it, has a different necessity to it. It's not any more important than the individual buying for their family, but it obviously, the whole purchase and sale and plan and strategy have different components to it, right? So I'm going to go up to the guy who's selling tomatoes or who's selling fish and whatnot. And I'm going to say, I'm going to have a conversation. I'm not just going to go in there and say, I'll take 1 bushel of this and I'm going to move on. It's $3.99 and I move on. The negotiation and the strategy that I use as the buyer coming into an auction market, which is a farmer's market, no different than the floor of the stock exchange, has a whole different feel to it. I'm going to go up to the guy who represents a vegetable farm or a fish farm or whatever, and I'm going to have a negotiation. I'm going to say to him, look, I need to feed 500 people tonight. And so I'm going to ask him, well, what can you do to supply me on that? And he'll say, well, I have enough shrimp to supply you, and maybe I have enough codfish to supply you. And then it becomes a negotiation. Same thing with stocks. It's a matter of a negotiation. If I have 100 shares of stock to buy, which is the roundest, the smallest amount that a broker can trade, I'm basically going to enter my order electronically. And basically we have a bid and an offer, right? The stock may be, people will buy it at $32 and they'll sell it at 32 and a dime. And if I have 100 shares to buy, I'm going to enter it through a electronic system, and it's just going to take the offer. 100 shares will trade at 32 and a dime. Goodbye, good luck, it's a beautiful day. If I have 1 million shares to buy, the strategy that I use once I go into the auction market is completely different, okay? There are other players. There are other buyers and sellers. As I described to you before, everybody has a different posture. Everyone has a price where they're willing to sell it, and everyone has a price where they're willing to buy it. I may have competition on the buy side to buy stock, and I may have a negotiation with the sellers if I come in as a buyer. This is all to say that if I walk in, if you are a card player in Las Vegas and you're dealt 3 aces and you want to, make some money on this hand, you don't let everybody know that you have 3 aces. You hold your cards close to your chest, and you are able to, to negotiate a good hand and make some money. Same way here. If everyone in the world knows that Peter Tuchman is walking in and he's got 1 million shares to buy, well, all the sellers are going to go higher because it's a supply and demand market. There may be buyers who may have had instructions to stay with a $50 top, and they are now communicating to their customers, Peter Tuchman has 1 million to buy, we better get more aggressive, right? So a negotiation and a strategy when you're buying stock, whether it's 5,000 shares, 10,000 shares, 1 million shares, who would buy 1 million shares? Well, a corporate raider and a large, a high wealth individual, an institutional buyer, may be trying to accumulate stock for a reason, right? They may believe that the earnings are going to be good, that this may be a stock that will benefit from the pandemic, right? When the pandemic came out, there were stocks which were the shelter-in-place stocks that got that rallied quite beautifully, like Zoom, video conferencing, like Peloton, stay-at-home bike. And then there were stocks that didn't benefit from the pandemic, which were the airlines and the hospitality stocks, right? So when somebody buys shares of stock, more than, if I'm a small individual investor or a retail investor, I can use a machine, and my execution and buying of my small amount of stock is not going to impact the market really in any way. So that usually is done electronically. However, if I'm a large player in the space and I have 1 million shares to buy, the way I do it, the strategy I use, the experience in how to do that by not telling everyone what I'm doing needs a human involved, right? Needs somebody who's nimble, who knows markets, who knows how to react, who knows how to bring out the best in the other players in the auction market to make it so that I do the best thing for my customers. So when you're talking about larger orders, trying to accumulate stock, I want to, whether I use the word to have a poker face. I don't go out and tell the world I have 1 million to buy, because the stock that's trading at 50 will suddenly be trading at 55, right? But if I go in there and I sort of massage the situation and I use a strategy and my experience, on how to buy large amounts of stock, right? That's my expertise. That's what I've been taught over the years, is to be able to do the best thing for my customer, that I can buy it for him in a reasonable fashion without everyone in the world knowing what I'm doing.
Yeah, absolutely. And I wonder, because I'm not sure to what extent you're able to talk specifics, but you're obviously executing on behalf of the customer, and there might be a certain situation, a favorite trade, for example, where you're very pleased with the nuance and the intelligence with which you've executed that trade for your customer. Is there one that specifically sort of sticks in the mind for you?
There's so much that goes into the decision to spend money on stock as an individual investor, or as a retail investor, or as a institutional investor. So, when someone is willing to commit capital to buy 5,000 shares, 10,000 shares, 1 million shares of stock, a lot of work goes into that decision. Analysts, advisors, portfolio managers, institutional traders, all sit around and mull over why we want to take a position in a stock. So I think I have to admit that, it was fascinating when there were more fun times before electronic trading, where I had a customer who wanted to buy stock for a reason, that he had a feeling something was going to happen in the future, and he gave me instructions, and I was able to buy it. We were able to put on big prints of stock. The buyers were seller, the buyers were happy, the sellers were happy. And, in the old days, the goal was to put together many buyers and many sellers and put on what's called a print, where you'd walk into a crowd, there'd be a buyer of 100,000, 50,000, 80,000. There'd be a seller of 200,000, 70,000. And then the market maker would put us all together. We would have a negotiation, and we would agree on a price. 500,000 shares would trade. All the buyers were happy, sellers were happy, and there was a big print on the tape. And that was a form of satisfaction that we did what we were called to do. Can't get specific about different stocks that way, but to relate it to today's market, where things are done electronically, where the largest trade is usually 100 shares electronically being matched up, I'm forced to remember the first couple of days of the trading in the sell-off during the pandemic, where it was fascinating to see that in any crisis, there are going to be winners, losers, and survivors. That's going to be the case with individuals, with stocks, and with sectors within the marketplace. And it was fascinating to know that, to watch people really forced to tap their brains. There are people, money managers, who are managing billions of dollars, tens of billions of dollars, trillions of dollars. There are people who have been taking positions in stocks, whether it's in the airline industry, whether it's in gaming, whether it's in hospitality, whether it's in food, cruise lines, whatever, over the last number of years, because things were strong, the economy was robust, and people were traveling, the consumer is in good condition. Suddenly a crisis hits of such magnitude, their positions and their necessity to have to answer to their customers of why I own 1 million shares of Delta Airlines, when suddenly no one's ever going to get on a plane again. I need to be able to pivot and be nimble, right? And if I'm managing somebody's big money, and be able to acknowledge we're in trouble, there's a crisis, where can I reallocate these people's money to be able to benefit for what appears to be a massive crisis? Some people never changed their position. They rode out the pandemic so far, and by now, with the market having rebounded, they seem to be doing better than they were in March, but they're still really hanging on by a string. If they happen to be invested in industries that really were hurt badly by the pandemic. What I found fascinating was for people upstairs, and it's something that I've learned a lot from, is that in any situation, in any crisis, there are going to be sectors and industries that will benefit and will lose. And for the people so bright, the guys upstairs who had to pivot and realize, okay, you know what? Cruise ships are going to be out of favor for a while. Pharmaceutical companies, if they get involved in making a vaccine, are going to be up and down for a while. Video chatting is going to be up. It's going to be huge. Peloton bikes are going to be up because people are not going to go to the gym. And so there were companies that, I hate to say benefited from a pandemic, but were able to freestyle, remodel their business plan within the confines of a pandemic and actually be able to make a shareholder equity increase for different people. So as we saw companies like the Pelotons of the world, the Wayfairs of the world, the Zooms of the world, the Amazons of the world, who are able to take care of the consumer and in turn benefit from the financial atmosphere of the pandemic, there are stocks that may take years to regain their position as we see this pandemic spiking up again. So for me, it was amazing to be given an order in a stock, whether it's a Peloton or I guess it's hard really to pinpoint individual stocks, but to watch how stocks that like Zoom, for instance, Zoom went from 30 to 400, right? And if you were to look at it in retrospect, you said, I should have known that, right? Suddenly we were all locked up in our houses. No one was going to be able to leave. Of course, video chatting was going to be huge, right? Amazon, nobody's leaving the house. They're still going to have to buy stuff. Food stocks, the Walmarts that are now selling food online, they were going to be robust and think clearly. So, I can't give you specifics about which stocks I traded where it felt right, but it was amazing it was amazing to be in those trades, to really have my expertise tested on, when things are going down radically, do I react? Do I pause? Do I try to really pick my spots? As the same when stocks rallied, what do you do if you're representing a customer in a stock that's gone from 30 to 400, right? We've recently seen stocks spike up like Pfizer on the news of the vaccine. What's great about being a human in that atmosphere is, an algorithm will respond to news that Pfizer has a vaccine and it's going to run the stock from 33 to 42. But me as an individual and as somebody experienced within the industry may say to myself, you know what? I think it's too fast and furious. Computer generated orders are chasing this. And I don't need to participate at 42 if I didn't buy it at 36. I may pause. I may use my experience to say, hold on. Once everybody gets all the computers get a taste on what they want, I believe this stock will come back in, meaning it will retrace its lower levels. And when that happens, and my decision was right, and it's not always right, Pfizer may have gone from 42 to 52, right? But we've seen it happen in companies like Impossible Burger, where it's a frenzy, it's a rally, it's gone viral and everybody wants to own it. Well, where do I stand as a human trying to do the best for my customer? So all these situations, which happen to me on a daily basis, especially in this wild volatile market, are what I find super exciting. And if I can use my expertise to not just sort of follow the cattle into buying things because they happen to be the flavor of the day, and use my expertise to take pause and think, okay, what's really going to happen when all the excitement tones down and the stocks come in a little bit, and I'm able to use my finesse to buy the stock correctly for a customer.
Yeah. Okay. Yeah. I mean, that makes complete sense. I mean, that's the bit I wanted to get. It's kind of the finesse, isn't it? I suppose, and kind of being able to intelligently put these orders through on behalf of your customers, where obviously, I guess a machine or an algorithm might not be capable. So, yeah, that's the bit I wanted to get out. And actually, I think that's probably an ideal point for us to finish. But before you go, what we do with every guest on the Opto Sessions podcast is ask them our quick fire questions. So I guess it's just a lighthearted way to end the episode, and you can answer in as little as one word or one sentence if you like. So the first one is, in your opinion, what is the top mistake traders make?
It's a really easy answer. Traders hope is not a strategy for trading stock. Okay, people need to do their homework. I work and try and educate young people about day trading. There's day trading and there's investing. Investing is a long-term position. It's a posture. It's a whole different thing. But the biggest mistake that traders do is they trade on hope. They don't do their homework. They will turn a winning trade into a losing trade. The whole point of trading the market is to make money. Trading is a matter of probability. So you need to do everything in your potential to use, in my opinion, technical analysis and not just chase dreams in this way. So I think the best advice to do is take profits when you have them and don't wait around for unacceptable losses. Never turn a winning trade into a losing trade, because hope is not a strategy for trading.
Great. All right. Yeah, very solid advice then. So number two, and to change tack completely, where do you personally go for investment and economic insights? Do you read any specific publishers, for example?
You know what? I basically avail myself of tons of information. There are a number of pundits or smart money managers online. There's a lot of great finance television, here in the States. CNBC is a round-the-clock financial news network. Basically, whether you have, I love following some newscasters who are really bright, some educators who are really bright. I love to avail myself of the winners and the losers, because people have really, people in the market everybody has an opinion, right? And the funny thing about it is, for everybody who's buying it, there's someone who's selling it. So it's super important for you to avail yourself of all the information. And be weary of, guys who are sort of tossing around big numbers, claiming that, trading the stock market is not a get-rich scheme by any means. So I avail myself of absolutely every bit of information in the world that I can get my hands on, from people who are successful and people who aren't, because you can learn as much from the winners as you can from the losers.
Yeah, definitely. Yeah, definitely agree with that. Okay, so number three then, a top tip for your younger self. So if you could go back in time and give yourself some advice, what would it be?
Well, as I said, if you find something you love to do, you'll never work a day in your life. I think it's super important, look, we have the internet now. We have the information highway is unbelievable. I love to share my experience with young people about markets. And, people will often ask me, young people will say, well, give me a tip. What should I buy? And I will always say to them that markets go up and down due to what consumers are buying and selling, right? And so I will often say to 13-year-olds, 18-year-olds, and 15-year-olds that they know better than me what really is hot and what is not, right? What is a winner and what's a loser? What's a hero, what's not a zero? And, I often will say to them, walk down the street, go to your school, look at what sneaker everybody's wearing, what computer they're on, what phone they use, what clothes they wear, what social media they're following, what games they play, what sport teams they follow, what theme parks they go to. A robust consumer will tell you what is hot and what is not. Facebook's not in, Snapchat's in. Nikes are in, Under Armour is out. Disney is in, Macau is out. There's so many things. But what I love about what I do, if I wouldn't have become a stockbroker, I would have loved to have been in branding, advertising, and marketing. I love brands, and brands are often what makes the stock market so cool, because, people say, I don't really know much about the market. And I say to them, yeah, you kind of do. Everything you do in your life as a consumer, there's a public company on the other end of that. Whether it's in the nooks and crannies of your phone, the person who makes the chips, whether it's the guy who makes the sneakers, whether it's the hamburger you buy at Shake Shack, whether it's the Impossible Burger you get at Burger King, whether, whatever it is, we know much more about markets than we think as a young person. The bottom line is it's the consumer. So avail yourself of information. I have my sort of spiritual mottos, which is, it's not a matter how many times you get knocked down, it's how many times you're able to get back up, brush yourself off, and keep going. I just want people to search and search and search to find something they love to do, to never feel you can't, email a CEO, make a phone call, try to communicate with anybody. Don't feel that anybody is any less or bigger than anyone else. Knock on doors, ask questions, and I'll go with that answer.
Yeah, absolutely. I've got one more question, and typically we speak to sort of money managers and day traders like you were referencing earlier, and we ask them about their investment strategy. But I'm keen to kind of pose this question to a broker on the New York Stock Exchange, such as yourself. So what is a broker's best source of, I use the word alpha typically, but what's your best source of outperformance? How do you get your edge on the trading floor?
I think it's a matter of customer service. That's where, first of all, one needs to thrive on the element. Some people in business tend to interact with a computer and a telephone a lot different than a human being. Okay, so there are obviously certain qualities that I possess as a human being to, whether it's service, whether it's customer service, whether it's my ability to interact with the other side of a trade that makes such a difference. Why have I been able to stay there that long? Honesty, your word is your bond, to do everything in my power to be focused and keep the fiduciary responsibility that I have to do the best by my customer. As I described to you, one of the reasons that I never owned a share of stock in my life was to maintain clarity when trading stocks for my customers. If I was worried about my own profit and loss, money's a funny thing, right? It can get into the nooks and crannies of our spirit and our psyche. But in order to really be doing right by my customer, I need to avail myself of all information on all sides of a story, on all sides of a stock. I need to maintain honesty and integrity. I need to be able to thrive in the heat of a crisis, okay? And I need to have a clear head, detach emotionally, and do the right thing and be deeply, deeply focused, right? That's the difference that, that I make from a machine and that I do as a broker to stand out in the crowd. For me, my notoriety makes a difference too, because people answer the questions. I'm able to get my phone calls picked up, but on any given day, I love the fact that, there's an information highway. It's my job to follow up on that. And it's also, I have to admit too, that it's important to know when I don't know things, right? I love the team approach to things. There are things that I'm good at, and there are things that I know. And there are things that I don't know. I don't know foreign exchange well and a lot about the dollar. I'm not big on bonds. I know what I know, and I know it well. I've been doing what I do. And so that entity and being able to say, you know what, I don't know, and be able to bring in, sometimes I will get orders in situations where what's going on in the world that may affect the price of that stock going up or down is a little bit out of my wheelhouse. And I will go to the ends of the earth to find out everything I need to do the best job for my customer. So I think that's important, and I think it's not to be cocky, not to be a know-it-all, to avail myself of all the information necessary to keep an honest and transparent relationship with my customers and do the right thing by them.
Absolutely. All right. Well, I think that's the perfect place to end then. Thank you very much for joining us on the podcast, Peter. It's been a real pleasure.
Absolutely. Great questions, great podcast. I appreciate it.
Thanks for listening, everyone. Just a quick note before we sign off. If you're looking for an easily digestible daily update on the markets, this might be of interest. Opto Updates is our short newsletter sent every day during the trading week, giving you a bulleted list of the top 7 stories from the global stock markets. We've done the hard work for you, highlighting relevant opportunities and trends. And in addition, we'll also keep you notified of any new products, stock reports, or webinars from the Opto world. If you're interested, sign up using the link in the show notes. And thanks also to Co-Fruition for consulting on and producing the show. Until next time.